So much for everybody being here today. And again, I love these kind of Saturday webinar events, workshops, because, we're closed on the market. So we can kind of kick back and relax, not get, distracted with the market and everything. So what we're going to dive into today is, talk about a trading process I use, how to find better trades. So the things that I go through, this kind of selection process for all the trades that I've set up and send out to my alert service. And I'm going to go through, kind of the steps that are involved in that, so you can see what kind of takes place. And hopefully this will help everybody else today in their trading decisions. So that being said, let us get started. So a little background on myself. I've been on my trading journey now for, over 40 years. I started actually back in the 80s with a company called Coastal Corporation, which is a company that we were just talking about here earlier, that was started by a guy named Oscar Wyatt, who's a real amazing character, big dynamic guy in the oil industry for many years. So was fortunate to get a start at Coastal Corporation, and at that time they actually had a training program that they would take in young guys and teach them how to trade. So trade crude oil and products. So I was able to get into that program, back in the 80s, and sent me down to one of the refineries in Corpus, Texas, and spent about 3 months down there, kind of going through learning the refining process, which was amazing. To spend time in a refinery and then kind of understand how crude comes in, you make products. Then I ended up in their chartering tanker department, which was really interesting. Learning how to charter ships and all scheduling, all that kind of stuff. Finally got into the trading group, cargo side on oil, and right away they sent me out to, within about a year, they sent me out to Singapore and spent a couple of years out there trading, learning how to trade products, and ended up trading products and crude oil. So really fantastic experience and a great learning experience. So if you ever get a chance, make sure to check out Singapore, beautiful place. And then, I got a really great opportunity, and I got a job at a company called Transworld Oil in the mid 80s. And at that time, they were the largest oil trading company in the world. It was Transworld, Fibro, and Mark Rich. And so ended up, spending about 17 years with Transworld, and about 15 of those years out in Bermuda, which was a corporate headquarters, and ran the international trading desk for 10 years out of Bermuda. So at that time, we started trading everything. We were, in all the energy sectors, trading products, whatever, we were trading on a large scale. And then we also got into all the different futures markets, bond markets, foreign exchange. So covered pretty much everything, and started trading options back with Transworld at about 1987. I remember we started selling options and collecting premium on cargoes of crude, and so kind of never looked back. So that's kind of a short, long kind of beginning of my career. And that being said, let's get started here. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So, in trading, the reality is that as an individual trader, we really have to do a lot all alone. And as probably everybody here knows, one of the most time-consuming and expensive tasks is to find those high probability trades. Now, over the years, I gradually combined what I've learned from when my employer would pay for everything, which was fantastic. And I had to develop my own research process and resources to use. Had to develop my own proprietary technical trading indicators to use, and also then, develop a kind of a strategic option guide for selecting which option strategies to use when and for the best results. So, without having an employer paying for everything, you do have to do quite a bit. So it's, kind of a hard task at times. Now, this then kind of evolved into a process that finds the best trades and the best option strategies to use based on the current market environment. So that's what I've always kind of strived for, using a systematic approach with technical trading indicators, and then using options to minimize risk and also to increase your potential profit returns from the leverage that you get. Now, what I realized and what I recognized based on my 4-decade trading journey is that my most profitable trades would all have the same underlying characteristics. So, what I did, I went back and I defined these winning trade characteristics, and then I developed a repeatable trading process to identify and find these types of trades based on 13 steps. So, kind of a selective, systematic trading process. So, one thing, go back and look at your trades, analyze your trades, your winners and your losers, and see what, are the characteristics of making winners and losers. So that's, what I've done. So I'll kind of go through my steps here, and, hopefully you can kind of start using these in your trading. But let's take a current kind of market review before we get into that. So first off, when I like to look at sector rotation. So, every day we're always looking at the various sectors, what they're moving, the money flow. So this is a really pretty cool, thing that you can use. It's called Sector Tracker. And anyway, so you can see currently where we are. You can see this is the 1-day sector rotation. You can see what happened here this past Friday. So the big mover was, really you had kind of rotation out of the market. So this consumer discretionary, some money moving out of that, energy, and then you had, the technology sector, XLK continues to, flow money into it, with all the high tech big cap stocks. And then you can see what's happening over the last month. Again, we've had more money kind of flowing out of that energy sector. Now, this is going to be an opportunity here before long, as you'll see when I go forward here, because we've had the energy coming out, we've had energy pulling back, but we're going to start getting into kind of a little bit of a seasonal period where I think we could get a little bump to the upside on energy. And then you can see technology, it just continues to just grind and rip higher. So you can see over the last 6 months, again, the big areas have been that tech sector, communication services, that's where all the money's been pouring in. A lot of it obviously primarily due to AI, and then, coming out of the other sectors. And then when we had, this week, we've had quite a bit of money starting to, pull back out of industrials and materials based on the dollar and other things that, have an impacts on that. So always kind of follow the money flow here using this kind of sector rotation. Super helpful for helping you to identify the sectors you want to focus in on. Now, the next thing I'm always kind of conscious of, I want to kind of be aware of the seasonality and seasonality trends. And so, to do kind of a quick overview here today, these are kind of what are seasonality continuation charts. So this data goes back, 5 years, 15, and like 27 years. And it's really interesting. You can see these seasonal flows, in cycles. Markets cycle up and down on price, but they also have cycles based on seasonal trends of supply demand. So here's the S&P 500 E-mini contract seasonal pattern, and this, obviously goes back 5, 15, and 27 years. Now we're coming into a seasonal low, which will be around the 25th of June. So we're currently right about here, okay? Now, it's pretty choppy, in this range here, but we get a pullback, which kind of tends to really bottom out right here about the 25th of June. And then you get that 4th of July seasonal rally. So that's really been a pretty strong seasonal trend, over the last 27 or so years. So, we'll be aware of this coming into the end of June. Now, we're currently, mid-June, so we're going to have probably another, week or so of chop seasonally, and then we could get a nice seasonal trend. So just to point that out, be aware of that, kind of keep that in the back of your mind as far as potential trade setups. And then you can see the NASDAQ 100 is very similar to what you were seeing on the S&P. You can see this data going back 5, 15, and 28 years, and we're currently right about here. So kind of a sideways, a little bit of a chop. And then you get towards the end of June, you've got that seasonal rally pretty strong into the 4th of July, and into the end of July, actually, on the NASDAQ tends to do better. So that's a look there. And then on energy, like we were showing earlier, I was showing you the sector rotation money coming out. We're going to start getting into seasonal low on that as well. And so that's going to come up, around the 24th of June, right about here. So we're currently right here, kind of a lot of chop back and forth, kind of more trending to the downside. But then again, we get that seasonal rally that tends to happen into the 4th of July. So be looking at taking advantage of that. You know, with the sell-off in energy, this could present some good opportunities here coming up in the next week or so. So that's a kind of a quick overview there on seasonals. Now, the next thing, let's take a look at what I call top-down market review. So what, over my trading career, what we'd always do, we would always look at a macro picture. At that point, when I started out, we didn't have all the great technicals and the charts. We had to just, depend on the macro. And so what we do, we'd have, different offices all around the world, primarily in the key areas. We had, an office. We had an office in Houston, New York, London, Singapore, and Japan. And we also had an office in Oman. So what we would do is we would just communicate with all the different traders that we had in the different groups, and we would just look at the exchange, the supply demand pictures of what we were seeing on the big macro picture, and then break it all the way down. So it was kind of a time-consuming thing. You had to have a lot of, good input and information. And so that's how we would do it. But now we have great charting and technical indicators that really can help. The fundamentals were great doing it macro, kind of looking at the overall supply demand picture. But when you can then overlay your technicals, you've got even a better view of the market. So let's take a look just from the technical side. And this is what I call top down. So when we start out, we look at the macro, the big picture. Okay, we want to know what the big picture is on the market. So kind of what I like to use is the monthly, and I kind of refer to that as the macro time frame. So if we just take the macro, the monthly, let's take a look at the S&P 500 SPX, and I'll just put this on monthly. You can pretty much see the trend, right? You just visually see it's just moving up from the left of your chart to the right. Now, what I always like to rely on are momentum indicators. So these are my momentum indicators that we'll talk about a little bit more. But what these will help to do is there are two things that you'll see. You'll see price, you'll see the price trend, right? But then there's also momentum trend and momentum cycles. So, when we look at momentum, that's going to show you when the money's coming in, money's coming out, and that's going to help you to kind of give you a future, a little bit of forecast as to the strength or weakness or when cycles are shifting. So you can just pretty much see here, this was back in 2021. We had a very strong momentum, right? And these indicators are designed for really fast. So this cycle one indicator, I've designed it for really, really fast momentum measurement. Cycle two is slow to confirm the cycle one. So what happens here, you can see cycle one will always go, positive first or negative. And then below here is my cycle reversal. So what happens is it we'll have kind of 3 or 4 steps to a change in cycle. Step one will be cycle reversal, which is going to be a leading alert to a potential change when the cycle's coming. And then what I look for is a trigger based on momentum when that cycle is looking like high probability to shift either up or down. So what I'll do is I'll look at the below indicator. Cycle one will then go positive, if we're looking for an upside move. So I've got cycle reversal 1, cycle lower study cycle 1 is momentum 2, and then my confirmation is 3, cycle lower study 2. So you can see here we had the cycle reversal back in here, and then we started getting positive momentum, and the market started shifting up. And the same thing, goes for the downside. You can see momentum started shifting down, and there we had that pullback, and off we go. But currently, we're still strong momentum to the upside. You can see momentum is still pretty much pushed up. Now we're getting, overbought, extended here. You can see on the monthly we're over 90% all overbought, but the potential is still we can stay overbought for considerable periods of time. So what I'll be looking at is this yellow line here. This is a moving average of this this indicator, overbought over sold reversal indicator. And so what I'll be looking for, this is a really good alert indicator of when things will start to kind of exhaust. So you can see back here, this happened back in 2021. Look how long it stayed overbought. 2021 all the way to 2022. Look at that. So markets can stay super overstretched, overbought, but look what happened when you got up here. The market just basically went sideways, right? So it went sideways for 3 or 4 months, Now we're coming into that kind of same situation. We're getting up to these extremes. Now, here's a measured move from this 1618 retracement for Fibonacci, which shows that we could get up to 5639 or 5640, which would be 564 on the SPY. But it's going to be a slow grind. So we're into all the easy money's been made. Now it's going to be a slow ride up, and it's going to be very, very dependent on stock selection or ETF selection or sector selection. Okay, so the easy money's gone, and so you're going to really have to be, really drilling down to find the good trades. Now, so we're going to start, we're overbought, but we can stay there. So what's going to typically happen is what you saw back here. We're going to start this sideways, kind of congested kind of area, and then you're going to see this thing start to exhaust from the buyers, running out of buyers, and that will lead to a pullback. Now the pullbacks are then going to be, based on pullbacks of certain key areas of moving averages, et cetera. So typically, when we're looking at the pullbacks could easily pull back to this, the 50 simple moving average on the weekly, which I call this the long term. But right now you can see momentum still solid to the upside, but again, we're getting, stretched, overbought, but we can stay up there for a while. You can see right here, we got this, kind of grinding up and just stayed overbought. We kept grinding. So that's kind of the environment we're in now. And then we can break it down and go down to what I call the medium term, which is the daily. And this is where we're going to, find our trades. We're going to be using kind of the daily, which is kind of the swing trade time frame. And this is what I like to look at for cycle trades that we're looking at. So you can just kind of see quickly back here, we had the sell-off here in April, early April. You can see how momentum shifted down right here. So we got up here to the top end of the range, right in here. And we had, then look at the cycle reversal indicator, just started going, cycling down here. Finally, we had momentum start shifting down. And then finally we had a break, okay? We had that pullback. So we're not quite there yet, but we're gonna start getting this kind of situation or pattern. And then it'll be dependent on, how, much of a correction we'll have. Now, one thing to be aware of is we're gonna be coming out here shortly, we're getting into another earnings season. And so when we get into kind of the end of June, you're going to have the stock buybacks are going to stop on a lot of these companies. So they won't be able to buy their stock back going into their earnings cycle. And that's going to take a lot of support out of the market, so you won't have that continued buying in the market. So that could, affect markets. So we could get that pullback here in July. We'll see. So we'll be, just be following these cycles and looking for the trades that are just up and down and within the cycle. So that's all we're doing is we're trading the cycles. Okay, so just that's kind of the primary thing I like to look at are the cycles and trade those cycles. All right, so that's kind of an overview there. Now then it comes down to selecting the best swing trade setup. And so my kind of steps that are involved in that, I want to look at the market cycle. So are we in a current uptrend, downtrend, sideways, or extended? So what I like to do is look at the broad market cycles. Okay, so I'll look at the S&P and basically the NASDAQ and the Russell as well. The Russell's been just very weak, trending down, and we've been on any shorts we've been looking to short the Russell. But the overall market trend, as I just pointed out, is up when you look at the S&P and the NASDAQ. All right, so we're currently in an uptrend. So been looking for good selective upside type trades with trading with the market trend to the upside. And it's been it's been harder and harder to find a really good trade setup. So kind of curious here, how's everybody been looking at the market? Have you been having an easy go of finding good trades, or has it been more difficult in this environment? So any feedback, that'd be interesting. I'd like to see what your comments are on that. But so it's been hard to find really good selective trades, but currently the market trend is up. So I've been looking for those cycle trend type of swing trades to the upside. Now the market condition, there's always going to be uncertainty. So I'd like to quantify, are we in a high uncertainty, low, or extreme? So right now we're kind of pretty much in a low uncertainty kind of market. Not extreme, not high, just kind of right there in the middle. Just the volatility index, the VIX is low. Market's just grinding on. more difficult than normal to find, yeah, good trades, that's for sure, yeah. And then the relative strength, that's where we can use our indicators to show relative strength of the broad market indexes, and then the relative strength of any specific maybe stock or ETF that we're thinking about going long or short. Okay, so that's very important there. And we can do relative strength based on momentum and the relative strength of one security versus another. So that's kind of how I will, judge relative strength. And then the next thing I do is I look for selective chart patterns. So there are, 5 chart patterns that I use. And so I call them high winning probability chart patterns. So when I see a certain chart pattern that I've defined, then I'll, focus in on that pattern, and I can, apply a certain option strategy based on the chart pattern. So that's very important, the chart pattern. So I'm trying to make everything kind of rule-based, step 1, 2, 3, 4, 5, and then it makes it more, mechanical, and you don't have to put your emotions in your trade. You're stripping out those emotions. And then the time horizon, how long is the trade going to take, that trade duration. So based on the chart pattern, a lot of times in the option, the chart pattern, then we can determine, the trade duration based on what the chart pattern looks like. So these are all kind of really 5 important steps that go into every trade setup or decision that I make. All right, then, so let's take a look. So step 1 through 5. So identify market cycles, market conditions, validate a stock's relative strength, and then the time horizon or duration. So that's kind of your first 5 steps. So market cycles. So again, we're going to be either an up cycle, which we're currently in. If you look at the broad market, trading in the direction of the broad market, there are a lot of stocks that are in a downtrend, but the broad market is currently in an uptrend. So trying to stay with the uptrend right now until that changes. So we're in an uptrend, there could be down, sideways, extended. And then I use 4 primary moving averages to identify and track trend and define areas of support resistance. So on all my charts, I'm going to be always looking to follow the 8-period exponential, which is a fast moving average, the 21 exponential fast, and then a 50 simple and a 200 period simple. So most institutions, hedge funds, traders will all be following the 50 simple, kind of a trend tracking. And then also the other ones that are really important are the 150, but the 200 is such a really important macro kind of bigger long-term trend. Simple moving average is one to use. So these are all important moving averages that I like to use and follow. Let me get rid of that. Now, the next thing is the market condition. So, you want to kind of quantify, the condition of the market you're trading in order to assess your risk, in order to, manage your risk. You might, in a high or extreme market environment, you might want to cut back on liquidity, kind of shift your gears a little bit and lower the amount of trades you're doing, and then also tighten up your stops. And then also the kind of option strategies to use when we're in more extreme high volatility markets. There are different strategies to use there as well. So we want to look at, are we in a high market uncertainty or extreme? Right now, we're kind of in a low, market uncertainty. Things are kind of a sweet spot. The data's been coming out okay on the inflation. You're in an election cycle, so the Fed is kind of not doing anything against the markets. So kind of things are kind of going okay so far. But something will always pop out, so we're always looking for that. But right now it's kind of low. And so we've gotten through the FOMC, that's gone. We've gotten through the non-farm payroll. We've gotten through a lot of these big data points situations. So those are out of the way. Now we've got the political events coming up, but that's going to be pretty, kind of neutral until we get closer to the election. And then, really extremes. War right now, nothing. Keep our fingers crossed, nothing happens there. Nothing going on there, no pandemic. But these are the things that create that extreme and create all that havoc in the markets, which we've been through so many times. Okay, so we need to be aware of that, and then that's going to tell us then how to shift and use our trades based on the option strategies we're using. Now, the next really big thing is I'm such a big believer in following momentum. So if you come into a trading room, a lot of times I'll say, well, let's just follow the momentum. So when we're trading in any type of market environment, it really all comes down to price direction. If you go back and look at your trades that have been the winning trades or your losing trades, you're going to probably always see the winners and the losers are going to be come down to you got the price direction wrong and you got your timing wrong. So you got the direction of the market wrong, and then your trade entry and your exits were off on timing. So that's going to usually be what makes a winning or losing trade. And then the next thing, a really important step, is managing your risk. And that's really where we can, then apply options, which is a great way to manage that risk. So for all this, you really need some good trading tools that can, really help you for signaling price direction, those cycle changes, for signaling a market timing, the best time to get in, to get out. And so what I found is the best way to do these two kind of really functions is based on momentum flows. So basically what momentum indicators do, they will measure price strength or weakness. And when you're measuring price strength or weakness across multiple time frames, not just one kind of time frame, but multiple time frames, this creates and sets up a really dynamic trend following indicator that you can use. So what it's going to help you to do when you're following the momentum, it's going to help you to identify new price cycle trends changes earlier. So we're going to get a cycle low reversal, cycle high reversal. So it's going to help you identify these cycle swings earlier. It's going to help to validate the cycle swing, strength or weakness. So if you've got multiple time frames that are, let's say looking at a positive, strong momentum, it's going to give you more confidence that the potential momentum of the market is going to push that up. So based on that, it's also going to then help you to keep in the trade longer and maximize your profits based on the validating of your strength or weakness based on multiple time frames of momentum. So this is, really important to kind of really follow that momentum. Now, the next thing is these chart patterns. So, over the years, I've kind of, I've always been obsessed with cycles. And so what I've identified are various chart patterns. And so these repeat. And so then we can easily see and spot these patterns and then kind of know what to be looking for and what's going to potentially happen based on what's happened in the past. So the patterns that I like to look for, and the number one pattern within these other four is what we call the volatility compression squeeze. All right, so within these other four, we'll go through the cycle high reversal, a cycle low reversal, cycle low retracement reversal, cycle high retracement reversal. Within these four patterns, this one specific pattern, the volatility squeeze, can be in these patterns. And what this is a consolidation phase where the market starts to just churn sideways. You may have had a big rip to the upside, the market expended a lot of energy, and then you'll see markets gonna kind of go churn for a bit and then maybe take off to the next level like a stair step up, or maybe they fail. But you're gonna see that they never go straight up or down, but they'll have these times and periods where they'll consolidate. And these are, consolidation periods, what we call the volatility squeeze. And so based on the trading indicators that I've put together, we can identify when the squeeze happens or starts, and then we can get ready for potential breakout up or down based on that specific pattern. So that's a really big kind of plus pattern that I look for. So here's kind of a look at what the volatility squeeze looks like. And again, what it is the compression. So it's identified as a period of price consolidation where price is coiling in a tight pattern and then has an explosive momentum breakout. So that breakout direction is either up or down, right? Now, when we have a security, a stock, ETF, whatever it might be, a futures con, whatever, that has multiple time frames in this compression squeeze pattern, then these breakouts can be even more powerful and greater with greater fall through, like, like a chain reaction explosion. It's like lightning in a bottle. I mean, these things can be just explosive, and I'll show you a few examples here in just a minute. So the chain reaction, though, is set off by maybe a lower time frame that's in a squeeze that sets off the next time frame up, and so on. It's kind of like a tsunami tidal wave. You have an earthquake that starts that little bit of a rumbling of the water, and it just creates even more strength as it goes across the ocean. And that's how sometimes these squeeze patterns can trigger and create this kind of energy for an up or down move. So it becomes a really great, fantastic setup for your swing trades or even day trades, offering that big timing edge. So the timing edge is crucial. And remember, in trading, time equals risk. So the sooner, the quicker we can get in and out of the trade, the less risk we're going to have. So these are a great pattern based on, risk of being in a trade. So just, something that I like to look for. Now, here's an example. This is a really good example to show the squeeze pattern across a number of time frames. This was on Netflix. And so you can see the squeeze here. You can see how tight that price is. Now, the trading tool indicator that I've designed will show dots that you can see right here. You can see green and purple magenta dots. These are color coded based on the indicator to show either positive or negative momentum. So when cycle one is positive, it'll have a green color to it. So you can see here, consolidated really hard. And then look at the momentum. Momentum starts shifting up. Cycle one is up, two's up. Now, backing up a minute though, here, let me back up real quick here. The first thing we'll look for is this cycle reversal. So that's step one. Then this gives you time to start watching the trade. So you can see that arrow there. The next step, step two, I'm looking for my cycle momentum one to go up and then two right here. So boom. And then we get a break of those highs, and that's the trigger entry point. So it goes up here and then momentum starts to pull back. What does it do? Kind of reverts back. Here's that 50 simple moving average in green. Then we have another, really tight consolidation phase. Then again, cycle reversal, momentum, 1 and 2 up, boom, boom, up to the upside. Then we start getting a cycle reversal here, getting price exhaustion. What does the market do? Starts going sideways. Then we get negative momentum here. See cycle one going down, then cycle two going down, and we just consolidate sideways in this example. And then we have another cycle reversal here. And then we have another squeeze going on right there, positive momentum, boom, to the upside. Now, in this kind of pattern, I like to use, debit spreads. These debit spreads are great. Long condors, we use a lot of long condors, which is kind of a debit spread with a credit spread added to it to neutralize our risk, to keep us positive on theta. And then counter diagonal. So, kind of a align with the chart pattern, a specific option strategy, based on the risk reward of that strategy and what it has based on the chart pattern. So these are kind of the three primary ones that I like to go to, with a volatility squeeze. Okay, so that's kind of how we can line that. Now here's one we just had. Look at this. Look at the power of this. This was on Skyworks. And so this is one that we did have as alert trade. Now look how powerful this was. So you can see this is a 4-hour time frame right here. So I like the combination of 4-hour and the daily. That's kind of what I use a lot. But you can see here's the squeeze. See that squeeze? See the dots right there? So look how tight that pattern was. This was in a squeeze for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, and then it broke out. Okay, so you can see it started breaking those prior highs. See how that was? So it could have gone either up or down, but the momentum was telling us potential probability is for a break to the upside. And so you can see the 4-hour, everything is kind of showing potential upside. So we got into the trade, actually this trade right there. And just, you never know how much it's going to go, but boom, this one exploded like crazy. And you can see what happened. It came up and filled that gap. That's why it moved so high. Very, very strong, but that's a 10% move in about 3 days. So you're in and out of that sucker pretty fast. Okay, so that's a volatility squeeze, and that's coming in within a retracement pattern from a moving average retracement. Now here's a cycle low reversal pattern. Now these are some of my favorites. These are when you've had a market, a big sell-off, which we have occasionally. We haven't had a huge sell-off here lately, but here's what it looks like. You get that big, massive move down, and then again, our reversal indicator comes first, so that gives an alert to potential change in cycle. But that's not, you don't want to jump on that because a lot of times you can get whipped around. Then I had cycle one go positive, wait for two for confirmation here, and here we go, cycle reversal back up. Now these are great for, again, debit spreads, or we can do a butterfly when we're targeting a reversal up to a key moving average or kind of a lot of option activity. Long condors and counter diagonals. These are kind of the go-to strategies we'll use on something like that. So matching that with the chart pattern. And then we have the cycle low retracement reversal. So this is when you have a retracement to a key support moving average. So it could be the 200-day. So this is a 200-day. This is actually a 200-week moving average in a 200-day. This was like on gold. So here was a big, huge support area. Look how it just consolidated here. This is a weekly. Okay, it was consolidating for weeks. And here's the daily. See that tight pattern there coming off of that? And then it exploded to the upside. Big, huge move. You can see how powerful these are. So great for a debit spread, butterfly, long condor, counter diagonal. So those are kind of the strategies that I'll go to and look for, based on that kind of chart pattern. And then we have the cycle high reversals. This is kind of where we are currently. We're up here to the top end of a range. We're above all the key moving averages. We're just grinding to the upside. Now, at some point, we're going to get buying exhaustion and markets will start to subside. And so in this kind of environment, you can see here, that's a cycle reversal right here from the reversal indicator. And then we finally get momentum starting to cycle down here, cycle 1 and 2. And then we get a break of those key moving averages here, and we start to get a pullback. Now, in this kind of situation, we'll typically when we get this pattern, we'll usually a lot of times first go to call credit spread, because then what happens when you're coming from a bull market trend where it's starting to show exhaustion, or even a bear trend exhaustion to the sell side, a lot of times markets can just turn sideways. So this is a perfect kind of environment for a call credit spread that will sell above, out of the money, and even if it turns sideways, we're going to get the profit from the premium received. So that'll be usually the first kind of go-to strategy there when we get these cycle reversals. And then, it sets up for potentially bigger move to the downside. So then we can jump into more aggressive trades. We can do a debit spread or put debit spread or a butterfly for a target to the downside, or a long condor or put condor or call calendar, things like that. So, those are kind of the strategies to be aligned with that chart pattern as well. And then the next one is the cycle high retracement reversal. So this is when we're in a down market, and then it retraces back up into a key overhead resistance and fails. So here's an example. This was like an XLK was a good example here, into a good trend up. It was trending up, but then came into this massive overhead 200-day moving average right there. And the first time up into a 200-day or 200-week, it usually is not going to crack. It'll maybe hit it, and then it pulls back. So you can see the reversal there. Momentum starts shifting, and down she goes. So a good trade setups would be debit spreads, again, butterflies, long condor, calendar diagonals, to kind of align with that kind of chart pattern. Now the next steps, kind of 6 through 9, is to find the trades, right? So that's really the hardest part, is to find these good trades. So I'm looking at the chart pattern, but then again, okay, well, where do you find the trade? So I've got a couple of different scans I use to kind of come up with these potential trade selections. And so, this will help to spot those breakout and reversals before the herd jumps in. So we want to get into the trade before everybody else, finds the trade, so we can get the first profit from it and get in and out, as fast as we can. All right, so make sure I don't miss any of your questions here. So I've got a couple scans, but this is one that's a scan I use based on the volatility squeeze, that compression squeeze. And so you can see here is just kind of this kind of, I've got a couple different things I'll look at. This is my kind of own watch list of different stocks and futures, everything that I follow. But I can then sort this, I can do this scan for a daily squeeze, for a 4-hour squeeze, for any time frame squeeze basically. But I like to look at the daily, 4-hour, and I'll look at the weekly. And then I can also look back and see what is triggered. So a lot of times something maybe is triggered out of squeeze, you can still get into it. But then you can see this daily squeeze, then you can see all the different stocks that are in the squeeze. So in this example, you had Costco. Now this is an old scan, but I just want to show you. And so you can see then the number shows you 18, and that's in red. So this is a daily. This has been in a squeeze for 18 days. and it's red because the momentum that I linked to it is negative. And then you see here was TJ Maxx. It was actually in a squeeze for 18 days, but the momentum's positive. So anyway, this is where I can then find a lot of these different setups that I'm looking for. Then I'll go through the specific charts and look at it, link to it, and then see if it's one that's getting ready to take off or what it's doing, and then look at the appropriate option strategy, trade duration, trade management plan like that. So that's a really helpful scan process that I'll use there. And if we have time, I'll go through and we can scan for a few things here today as well. Now then the next thing, 10 through 13, is finally trade the setup, okay? So, these are things you do for every trade. I do this for every trade. Caterpillars in a squeeze, we can look at the cat. Let me write that down. So this is what I do for every single trade. So, it takes time to do this to find the best selective trade. Okay, so then finally you get to trade this to the setup, but then it comes down what option strategy to use in your management plan. Now, before we get too far down the road here, I do have a nice special here for everybody here that's here today. And I had a couple people saying that they were looking to update their alert service membership. So got a really great special for you. What you want to do here is put in this, go to powercircletrading.com/special. Let me give you that link. And I've got a current nice special going on where you can get 5 months of my alert service with a 15% off on the on your price. Okay, so use this link here. Let me put it in here for you. All right, so if you click on that powercircletrading/special, it's going to pull up this page here. Okay, and so you can take advantage of this 15% off right now for the rest of the day. It looks like it's got a little countdown clock on it. But here's make sure when you go in to sign up for it, use this code in small cap alert 15. This will give you the 15% off. All right, so come down here and you'll see exactly what you're going to be getting basically. So the lead, open, and close trade alert service. So you're going to get all 5 of my trading alert services for the next 5 months. Okay, so you can stop and start this, when you want. So if you do have to go off on a business trip or vacation, whatever you want to put on pause for a while, you do it automatically yourself and then come back in so you're not wasting your time. So you'll get my 5 alerts services for the next 5 months, plus membership to the trade club, which gives you access to my trading room, our Q&As, and a lot of other stuff that I'll talk about here a little bit later. And then I just put an overall kind of quick summary here for you. You can see, so, when I started this first part of the alert service back in 2018 through the Friday, we're running really high winning probability of trades, 740 closeout trades, 535 winners, 47 break even, 158 losers. So run around 79%. Now these are unaudited, right? But this is kind of a summary. So, been staying very consistent with the winning trades. And so with this service, you will get basically 5 types of alerts that I send out, based on the market chart pattern, market conditions. So you could I might send out you a calendar diagonal. I might be sending out a butterfly or a long condor. I might be sending out a breakout trade, which could be a debit spread or a credit spread. Or I might be sending out maybe what we call butterfly or calendar pinning trades for option pinning trades, or selective earnings trades. So 5 different types of trades that might be sent out. And then I'll send, if you a lot of the members, they just want my the stock trade or the ETFs, and they'll do their own thing. They'll just buy shares or buy call options or put options, not do the options spread that I send out, which is fine. But I always put the option spread in if you want to use it, because they're low risk, high reward kind of option strategies. But a lot of members, like I said, just take the trades and do their own thing. So, but these are the 5 types of different option strategies that I would link to the trade, but you don't have to do them. You can just do your own thing. So basically you have access to this for the next 5 months. So 8 to 12 stocks or ETFs every month. I'll send out that alert, all that stuff. We'll talk about this a little bit more, down the road here in a few minutes, but that's what entry levels, target prices, etc. So a lot of great stuff in here. So just go down here, and then you've got membership to my trading club for the next 5 months. And that has a virtual trading room every day from 9:30 Eastern to 10:30. Really great place to come in, help you out in your trades. Any questions you have, I'm there to help you out on that. Then we do a video, we do a market daily video update every day I do after the market closes to, give you my hindsight in my, forecast of what's going to maybe go on the next day or so. Videos are archived. Then we do every week we do a live Q&A that's recorded. Everybody come in, ask questions, and I'll go over a lot of stuff we're looking at. Traders Education Vault. Then you get everything off on my website, a 60% discount. So the enrollment price is $575, but use that link, that code, that promo code, use the alert small cap. Again, make sure it's small cap, alert 15, and you're going to get 15% off. So this is going to be $489, and there's a 2-pay if you want it. So it's a great deal. I mean, this is basically, if you get my alert service for just 1 month membership, it's $147. If you were to get this kind of package at $575, it's $115. But if you do this right today, you're going to get 15% off, and so it's $489. So if you look at that, that's $97 a month, or that's $3.26 a day. I mean, that is a great deal, I think, anyway. So for everything that you're going to get, and to find selected trades. I mean, not to have to spend all your time doing it and have somebody else do it for you, plus then give you the alerts to when to adjust, when to get out, all that stuff. That's, I think, probably well worth $3.26 a day. So I want to throw that out there. So use that again, and that'll get you started. So make sure you put alert 15 to get that. All right. So we'll talk about that a little bit more. If you have any questions, please feel free to ask. Well, if you're thinkorswim, if you're you may need more memory into your computer possibly, or you've got to what you might want to do on your scans is limit the number of stocks. So anyway, it's a memory issue, Arthur. So if we have time, I can show you. Don't go over maybe typically 100. You can pretty much scan probably for 100 stocks, something like that. So anyway, yeah, I see that. But I would contact also thinkorswim and ask them on the memory side. So that's make sure to jump on this if you're interested. And then let's take a look then at the alert service. So what I've done. So the goal of trading, basically in my opinion, is to have more winning trades than losing trades, right? Since it's impossible to have all winning trades. Now you could have more losing trades, but the big winners are huge, right? But typically that's gonna stress you out. So I don't like a lot of stress, and so I look for just high winning probability trades. So in and out, in and out. I'm not looking for just every trade has to be a home run. So singles and doubles, and then occasionally we hit that big home run. So with this reality in mind, the performance today actually of the trade setups that I sent out to the service, I think it's been quite remarkable actually. If you can think about it, over this long period of time, we maintain around a 79% winning rate. So again, these are unaudited, but this is just a summary, just win, loss, okay? And so then I started again, my first alerts that I was sending out was back in May of 2018. These were just basically breakout, like debit spreads and things like that. But over the years, I've added other, things to it, like butterflies, condors, things like that, to have a more of a kind of a cover all the different market conditions that we're in. So that was kind of the goal of it. So again, you can see we've had, with the service, we've had 740 trades that are closed out, 535 winners, 47 break evens, 158 losers. So, run around, when we combine all of these 5 services together, run about 79% on the win rate there. And then what we use is a service called Telegram. So this is a free a free service that when I put the trade in, and this goes out within seconds. So here's just kind of a, look at what this was just from Friday the 14th. You can just see what it looked like. We had a trade on, we had a LU, we had this what's called a binary calendar option spread, really low risk. And so I sent out this, updated adjustment alert on Friday. So you can see here, went out, this goes out within seconds. So you can see I just sent this alert out saying to, if you had the spread on, buy to close the 68 put for a profit, or just let expire, and then sell to open the 21 June 67 put. And then here's your summary. But then here's what trade that we did Friday. This is a new. I'll say when you get this alert that comes out, it'll say, like, if it's new, it'll say new, and this was on net. So we did this trade on Friday. So and I'll put where it was trading. So a lot of members they want to just jump into the trade. They just want to do their own thing. So I'll have a bunch that in this one it's a long trade, so they may just, okay, what the heck, I'm just going to go long net, maybe the shares, they might do shares, so they just go long calls. But I'll always put a option strategy with it that I think is a good one for low risk to good high reward. So then I'll kind of give you a brief description of why the trade is being set up. In this example, you can see it says this was a weekly cycle low. Okay, so this was a key cycle low that I look for, which is not going to happen all the time. And so this was a weekly cycle low retracement reversal off the 100 simple moving average. Okay, plus it had a really, what I like to look for, this is what a 513 upside cross, which is a really nice confirmation of a momentum either up or down. So this was an upside cross, plus we had positive momentum on my momentum indicator. So set the trade up doing a condor, and did the condor to keep the risk low. So look how low the risk was. So we went out, and this was buying the 21 June 76, 78. That's basically the debit spread, and then selling against it the 80, 82, and did that for sent this out to do it around 40 to $52. So that'd be 52 cents or $52 per shred. So that's your max risk. Okay. And so that was sent out then on Friday. And then, if you want to take it, you can take it. Like I said, you don't have to take it, but you might think, wow, it looks good, I'm just going to jump into it. Some people just jump into it and don't do the spread. But I give you that option. So the more options, the better, right? So here's a kind of a look breakdown of the butterflies and long condor trades over the last couple of months. And so this part of the service started back in May of 2019, and through yesterday we've had 169 trades closed out, 119 winners, 11 break even, 39 losers. So right at about 77% win rate. Now the thing with these trades, these will be the lowest risk trades of all the alerts that I send out. So typically maybe $75 per spread. So I'll have stop loss levels and things like that we'll put into the trade. When the alerts I send out, I'll send you out adjustments as well to either make the adjustment or take profit, etc. But these can give you potentially huge profits in anywhere from 2 to 1 or up to potentially 25 to 1. So I'll show you one that we did get pretty close to that. So these are the butterfly. This is that selective group here that for certain market environments and conditions, I'll typically go to. So here's that net long. We did this as a call condor. This was done Friday. And so I showed you this earlier. It was trading at 75.40, and I sent this out to do this call condor for around 52 bucks. Or you might just do it on your own. So you can see here a beautiful chart. This is the chart pattern that I was looking for. Here's a weekly cycle low reversal. See that coming in right there? So this is what it's showing me potentially, hopefully, this is trying to bottom on the weekly long term. Now it could roll over and go straight down, but we did this with an option trade where we had basically $50 of risk or so. So even if it does go down, you're not going to lose the ranch. And so then you can see here on the daily, we had that cycle reversal here, right there, okay? Then we had cycle momentum 1 shifts up, 2 shifts up, boom. We have the moving average cross, so boom, take a shot. Now, if you don't take a shot, you're never gonna, score a goal. Now, this was, what we're looking for is a move up into this area right here. So there's some moving average resistance, but we took the shot, and we took the shot with a very low risk trade. All right, so that's the other thing. Keep your risk low and look for those singles and doubles, and sometimes we're going to hit the big home run. So this trade here, what we did was what's called a call condor. So basically, if you break it down, we're along the 76.78 call debit spread, $2 wide spread, and then sold against it the 80.82 call credit spread, $2 wide. So we've got a kind of cap trade, but we've got a potential with this trade where we have a maximum risk of $51. Okay, spread is $200 less 51. So if we max potential profits 149 per spread, that'd be a 292% return on this very low risk. Okay, so that's what I'm trying to focus on. But again, remember, everybody's got a different risk profile, a different capital count. So a lot of my members just do their own thing. They have some pretty big accounts, so they'll just jump in and do it. All right, so that's number one. They just want the trade. Okay. And so here's what the condor look like. You can see, so you've got options of what you can do. Either do your own thing or, do this selection if you want. And so here's where it is currently. Went out Friday. So we've got, $51 of risk. Okay. Now the other thing I look at is what we call theta. So if you're not familiar with this is time decay. So it's got a positive theta. That's the other reason I did this trade. All right, and we've got a potential to make over 200% return if it goes out in this area next week. So very low risk trade, but good for this kind of setup. So that was one. Now here's that Skyworks. This was just this one just ripped, and it was a beautiful trade. And a lot of members just jumped into it, just did their own thing. So this was on the 11th of June. So it was trading at 95.15. All right, so you can see here it says new Skywork long trading at 95.15, volatility squeeze, weekly cycle low reversal, 513 upside cross. This had everything I was looking for. And so what we did was a call condor because we could keep our risk defined. Now the mistake with this trade was some of the members just did their own thing. They just bought calls or the debit spread. But this one we had a condor, so we had the debit spread, but then we had the upside capped at 98.100 to keep our risk low. Okay, so look at the risk. We set this out. This was a trade that you could have set up for around 50 bucks. All right, so that was the trade setup. And so what happened with this trade was it just ripped to the upside. So everybody that jumped into it without, putting on the upside cap, that 98.100, made out like a bandit, or depending on what they did, some members just, bought calls. They really cleaned up. And so you can see this thing just, broke out and had basically a 10% move higher in 3 days. So what it did was actually went out and filled that gap right there. So I could see that coming. So this was a huge winner, depending on what you did, but that was one that was sent out on the 11th. Just the trade was a beautiful trade setup for long. Now here's the short trade that we did. These are all over the last few days. So if you've been trying to find good trades over the last couple weeks or months, these are a bunch that we've just been doing. We had one loser, small loser. We had Lulu on. Excuse me, 1 second. We had a Lulu trade on. We lost about $35. Okay, so we've had pretty much very consistent winners, some small, some big, et cetera. So chip, 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 Now this is one that we set up for a short trade. This was set up last week on the Friday the 7th for the Russell 2000 IWM. So we did this as a put debit spread for just a quick move down. So it was traded at 201.36. And this had a key weekly reversal. So when I saw that coming in, I'm looking at these things all day long. I thought that, man, this looks like a kind of a really quick maybe move down trade that we could take over the weekend into Monday. So I wanted to keep it very short-term duration, all right, to keep the risk super low. So I made this a short duration trade. So it says new IWM short was traded at 201.36, weekly cycle high reversal, daily negative momentum on cycle 1 and 2, target 199, second target 198. So you could have done your own thing, or you had the option to do this trade. So set this up doing just a put debit spread, the 201, 209 or 199. Set this out to put it on at around because you might get it better, you might get a little bit worse, but around 48 cents, $48. That was the max risk for this trade. And then the came in Monday, the 10th, boom, right on the open. I sent out alert before the market opened, said be watching this. And so it market open right here. Sent this out earlier. It was traded at 199.54 in the pre-market. I said if long the 201, 199, take profit on the open, target at 199. So that's kind of the stuff that you'll see, or do your own thing. You don't have to follow this, it just gives you the option. And this worked out, just exactly like we had planned or had planned. So went short this thing right into the close on that Friday, the 7th. Was trading right here at 201, right there. So went short, and then over the weekend, it had such great momentum to the downside. Looked like, and this was also a 618 retracement coming in at 198.38. So I thought high probability just to go to 199. Momentum down, so we did this just low risk put debit spread targeting 199, and we got took the shot and we got rewarded. So here was the trade setup that was done. So this was just expiration on the 10th. That was on Monday. So that's the great thing with the ETFs. We do a lot of times when we do a short or something, we'll do a QQQ or SPY or Russell, because we can do these different expiration series. So this was expiration on Monday. So we had a really cheap trade. So did the 201, 199 put debit spread, $2 wide spread. So total risk was 49 bucks. So spread width 200. Now the maximum would have been potentially 150, not potentially, but the max could have been $151 or 308% return. Okay, so max risk 49, max profit there. So that was the setup, and then we went ahead and closed it out because that 199 was our target. So it didn't wait around, just jumped out into the trade, out of the trade, and the spread went from 129 right towards the open, got out, and our cost was $49, $80 profit, 163% return, over that short period of time right there. So that's a look at that trade. So these are all within the last week, and then we've had a lot of pretty good setups, and depending on what you did, you could have done really well. Net is currently at 77. Thanks. So one of my members saying he got into the net trade at 52. It's currently at 77. So let's keep our fingers crossed there. All right. So these are like, again, but let me emphasize that you can just do your own thing, or I give you the option to do these setups that are low risk, high reward. Now here's another one that we did. This was a really great trade as well. So this was a meta long. All right, so we set this up on the 5th of June. It was traded at 490. And again, here's your telegram. So this will come to you within seconds. So here it says, new meta long, trade around 490. Daily cycle low retracement reversal off the 21 exponential moving average. Also had a daily volatility squeeze plus positive momentum. Upside target 1, 500, target 2, 505. So you could have done your own thing, or the trade setup that I set out was another condor to keep our risk down. So it was a 490, 92, 510, 512 cap in the upside there. Okay. So this is to do around 80 cents or 80 bucks. Or I said could do it by a debit spread first, then sell a credit spread against it. So that's what a lot. That's also the flexibility. So that was a great way, because this thing was starting to go up. So we did the debit spread first, then sold the credit spread. All right, so this turned out to be a great trade. Again, depending on, if you stayed with the trade or got out. Now, sit out and got out of this trade a little early, but a lot of the members did stay in it. So just wanted to show you the trade. The trade was just a great trade. So here it was in that volatility squeeze. You see those dots, really tight pattern right there, okay? And then we had the, on the weekly, we had a cycle reversal. You can see here we had a cycle reversal, then we had momentum. Cycle 1, we had our moving average cross right there. So really good setup. So this was right there, got in right there, perfect entry. And then this thing started to rip up. Now what happened with this trade, the original trade, what we did was this thing really shot up really hard and then adjusted this trade and then got out with a small profit, but a lot of the members stayed in it. I remember that, Pete or Gene or a bunch of them stayed in it, didn't do the adjustment and just stay with the original trade. And here it went out. It was a perfect, this was the perfect trade. This is exactly what, the trade, how it was planned was for this. And so sometimes they're just, they just get you so wound up because they're so perfect. So here was the trade setup that was done when it was set out. So this was for expiration on Friday, 14 June. So this was a call condor 490, 492.5. Again, some of the members just did their own thing. Don't like spreads, just jump in it, maybe buy calls, maybe buy a call spread, but not do the condor. So 250 spread width, and then set the upside target to keep our risk down and to give us positive theta. Added the 510, 512.5 call credit spread. So in this trade, it was moving up. So did the debit spread first, and then when it started to kind of stall out, added the credit spread. And so $2.50 wide. So got into this trade for the total cost of $65, 65 cents or $65. And so the beauty of the trade, see, this is what we call the condor. So you've got it where you can, you're capping your upside. So you're kind of trading right in this range here. So if it goes out in here, you've got your max profit. So this is spread width was 250 or total cost 65. So potential make $185 per spread if it goes out in here, and that's a 284% return. Now it's also, the reason I like this is because it's got a positive theta. So if it does just churn sideways, we're not going to lose on the trade. It's just going to keep, making us a little money until it makes its decision to go. And so this went out exactly what I had planned for on Friday. So some of the members got a big payoff on this one. So it went out perfect right there between our spreads right here. So you can see here was your long call right there at 490. Here was the short call part of it right there, and then sold the other call way out here, bought that call, and it went out right there. So perfect. So 65 bucks debit to max profit 250 on the debit spread. So this was up 185 or 284% return. Yeah, so the universe of trades, U.S. trade, well, some foreign ETFs sometimes. Sometimes I might do FXI or EM or EWJ. So mostly the U.S. type trades, mostly stocks, U.S. ETFs, cover all that, So just want liquidity. Liquidity is the key. So I'm looking for those stocks and ETFs that are liquid. Now here's another one. So these are just, we just do a lot of these. So here's one on coin, okay? So this one was done on the 24th. So it was trading at 535, I don't know where, 235.80. So set this up 31 May long call condor. So here's the trade just to kind of outline it for you. So 235, 237.5, 260, 62. And then we did on this one, an adjustment because it came down. We were able to cover our credit spread for a profit, reduced our risk, reduced our costs on the debit spread side. So then we had this adjustment. So, I'll send these out to you. If you want to do it, you can. If not, you don't have to, obviously. And so then this adjustment to the trade on the 29th, it was now trading at 239.21. So adjusted the trade down, the short part of it down lower, taking profit on the credit spread that was higher out. So again, here it is, new coin long, trading at 235.80. Daily volatility squeeze. There you go, that volatility squeeze. Positive momentum, target 250, target 260. Did it as a condor. That's the original trade at 80, do it around 80 bucks. And then on the 29th, now it was trading, it went from 235, now it's trading at 239. And so then I sent out alert, said if long the May, that spread and long multiple contracts, make sure to take some profit, currently up $31 per spread, 38% return. Then I put in adjust balance, and I showed you how to do that. Buy to close, the 31 May 260, 62.5 call for a profit. So we had a call credit spread up, higher up, took profit on that. That will then adjust down our costs on the debit spread side. And then I said sell to open the 31 May 255.57.5 call spread. Adjusted trade then ends up here. And then on the 30th, trading at 245, went from 235, now it's trading at 245. If long, the adjusted, call condor and long multiple contracts, make sure to take some more profit, hold balance long, currently up $75 a spread, 119% return. All right, so these are kind of what I'm looking for, just singles, doubles, but sometimes we're going to get the big home run, and that's the way you want to, plan your trades, to stay in the game, just stay and stay and keep your risk low and just, grind it out. So here was the coin, trade set up here. You can see again, you'll see the same similar patterns that I'm looking for. So I had a cycle reversal. I'm looking at the same steps. Every trade I look at and I take. It was in a volatility squeeze right there. Cycle 1 and 2 go positive. Took the trade right here and ended up getting out of the trade right there. Okay, so profit on the 30th is trading at 243.77. So from 239 to there, and so these are cycle swing trades. It could be 1 day to 2 weeks typically. And so here was the trade setup, what it looked like again. So just 31 May expiration, 235, 237.5 called debit spread. And then after the adjustment, had the 255.57.5 credit spread. We had our risk down to $63 per spread. That's the max risk. And spread width 250 less 63, so potential to make $187 or 296% return was the potential going into the trade. And then ended up getting out right here on the 30th, the day before expiration, right there. Boom. So here was, if we waited the next day, but decided to get out, earlier because this thing was just kind of looking like it might drop. So got out right there, the day before. It was traded at 243.77. So the spread went from $63 to 168. So we had $105 profit, 166% return on that trade. Okay, and so here's another one. This was another one we did. This was on Microsoft again. So all of these things are so similar, but the key is to find the trade, right? So I'm constantly looking at these different scans, looking at the different things. Here it says new Microsoft long, trading at 423.70. Trade set up to play a day. Here it is again. Volatility squeeze breakout above prior all-time high. So I won't go through all the details, but another condor, so it's traded at 423, and then it ended up profit on the 22nd. Right here is trading now. It's trading up at 428.45. And so here you can see Microsoft long trade at 425, looking good for a close between 425.35, potential max profit of about $203 on the spread or 431% return, currently up 200. So this one turned out to be pretty much a home run. So this was on Microsoft. This is what we call a broken wing long condor. So again, the same situation pattern that I'm looking for. So here was at 4 hour. We had this, momentum shift, etc. We had the volatility squeeze there, got in right there, and boom, and then out right there, when it was trading up to 428. And so I'm sending you these adjustments, sending you these, alerts to, stay with it, get out of it, things, so you can make your own decision. Again, everybody does their own thing, but I give you the options of things that you can do. So here was the trade setup, 422.5, 425 called debit spread. See, this is what we call a broken wing, because this spread, the debit spread had $2.50 spread, but then made it cheaper by doing a wider credit spread, 435, 440, so $5 wide. So it got the risk on this one on the downside to 47 bucks. So potential $250 wide spread, lesser cost, 47. Potential make $203, 431% return. And this one turned out to be the max profit. So this was perfect. Went out exactly like we had planned for it to go out. Went out right there at 428 between our spreads, right there. So you can see it, spread was at 47 bucks, went to 250. So we had the max profit on this one. So just stay in the game. Some trades we might make, 50% or 100%. Some we might make 400%. Some we might make 1,000%. I'll show you the next one that I think we did make over 1,000%. So yeah, you don't have to worry about getting, so here's a question from Wayne. He says, I always worry about getting automatically exercised by the exchange. You will not get automatically exercised. So okay, so don't worry when you do these spreads, you're not going to get exercised unless it's deep in the money on the last day. So if you come into the trading room, you're not going to get exercise. All right, so I plan the trade so you're not going to get exercise. So I'd like to tell you not to worry about it, because I look at that. That's part of what I do. I look at it to make sure you're not going to get exercise. So if I thought you were going to get exercise, I'll let you know quickly by the alert. But you're not going to get exercise. I'm pretty much, feel pretty confident with that. Yeah. So there's a lot of things that we do, Wayne, to check to make sure you're not. It's called intrinsic extrinsic value. So what we'll do is if we're at a point, and this is brought up by Ned, one of the members, if we're there where we think, we're close, we're at the money, or even in the money on a strike that we have on a credit spread side, what we'll do is we just look at the intrinsic extrinsic value. If there's still a lot of extrinsic value, this is what I teach in my courses, don't worry about getting exercise, because if the person that you go short an option, the person that bought that option, they're looking to, if there's any extrinsic value in that option, they're not going to exercise it. They just sell the option because they get more profit. They're stupid if they do that, so they're not going to do that. Well, some people might, but typically they're not. And then if they do, that's great for you, because there's an extrinsic value. You just cover the trade back out and you keep the premium. Anyway, there's a lot of stuff you can do. So it's not something that you should really worry about, and it's something I always look at for every trade, so you don't have to worry about it. And so question, once a trade, here's a lot of trade, I'll show you this one. So question is, once a trade is sent, how long is it valid? At what time should one take the trade if one cannot take it immediately? Yeah, so good question. So this is, one of the things that's going to be part of, what you do. So, when these trades are sent out, you need to react as fast as you can. Now, because I look at a lot of these trades are based on momentum, because again, like I mentioned earlier, timing is very critical. So typically, if you can't get in within the first, when I send it out within about the first 5, 10, or 15 minutes, then you might want to just kind of you don't want to ever chase it, okay? So let me just back up and I'll show you. So I'll always put it around, and a lot of times it'll just stay around, like net traded and stayed around that number most of the day when I send it out. But if it runs away from you, you don't want to chase it, okay? So I said here like around $30. So, if this was, if this went up to, 50 or 60 cents, you're not going to want to chase it. So, around $30. So, if it goes up to $40, 10 cents up or down, then go ahead. Now remember, then sometimes you might get it better, because it may pull back. So sometimes you may get a little bit worse, but it's just, going to be up to you. So again, these are just, and it might be that you don't want to do the trade the way I sent it. You might just want to jump in, buy the shares, just buy the calls, et cetera. So there's a lot of different stuff that's still going to be down to you as the trader. But the kind of, I guess the bottom line, the number one thing is you're going to get a good trade selection, either a long or a short, and then it's up to you to do what you want to do. But I will give you the different options of what you can do. So I'll always give you the option trade that I like based on low risk reward and high reward. All right, but it may be that you just want to do something else, or maybe you don't like the trade, but it gives you a lot of things to look at. All right, so even for for $3 a day to get you a lot of different things to look at, then you decide, hey, I do like that trade, and you may decide that you want to keep it on longer term. I had just a talk with one of my members a week ago. He likes the trades. He just takes the trade service so he can see the trades that I'm sending out, and then he does his own thing. He might like to keep it. He might want to keep it on a month or 2 months. He might really like the trade, and he just doesn't want to keep it short. He wants to keep it a longer duration type trade. So it just gives you it just gives you trade options, things to look at, and that's worth a lot of money because it's saving you a lot of time. And I think I've got a pretty good understanding of the markets to give you some pretty good high probability type trade setups. Now, they're not going to always be winners, but they've been pretty consistent. And again, it depends on your duration. Okay, so that's Microsoft. Now, here's one that we did. This was a really cool one, and this is kind of something I started doing a couple months back. And these are what we call the kind of binary pinning trades. Okay, so these are trades that I've started sending out that are super low risk, but they're binary. You either win or you lose. Okay, so I'm not going to send out adjustments or anything. You see, they're so low risk that if you want to take it, you take it, and if you don't, you don't. But they're cheap, low risk trades. So question, would you ever delay entering the credit spread when entering a long condor or butterfly to increase the credit? Well, yeah, for sure. Would you? Yeah. So again, that's up to you. Like that, Skyworks, that trade, you could have just, hindsight 2020, should have just left it alone, which some of the members did, and they made out like a bandit because it just ripped to the upside. So they just figured, okay, I'm not going to put the credit spread on. This thing could really go, and it did. Right? So definitely. So this is binary. So these are a few that I've been doing. These are very selective. This is one we did back in February. So this was a Tesla long binary monthly butterfly option pinning setup. So at that time, Tesla was trading at 189.35. Hold on. Yeah, Charlie, you want the link? Here's that link for the special. There you go. Yeah, if you want, remember to do, if you use the promo to get the 15% off, use alert small cap 15 altogether. Okay, use that. All right, so this is one that we did. And so this was trade set up for a potential monthly expiration pin at 200 next Friday. Okay, so look at this, was the coolest trade. Buy one, buy one, or you buy 10 or 100, whatever, but I'd say buy the butterfly on Tesla. So we bought the 197.5, 200, 202.5 call butterfly at 12 cents. 12 cents. $12. That's the risk. Super low. Unbelievable. This trade went out almost 2,000% return in 8 days. So here it was set up on the 8th, and here it was going into the expiration on the 16th. Now here it was at about 2:52 p.m. Sent out this, said Tesla long binary monthly pinning trade, trading at $200. Butterfly going out up about $215 per spread, or 1,791% return. Take profit here. Make sure to close out trade prior to close. Okay, make sure to close out so you're not going to get exercised. And then I sent out one more. I said, wow, it actually was a perfect pin at the end of the day. So this went out. It was trading at 200. It was up 1,916% return. Okay, so that was just an incredible trade. Now these don't happen very often, but this one, that's why these trades was at $12. So if you lost $12, it's not going to hurt you too bad, is it? You can. What I don't even know. Somebody said, I was looking at the other day. They went to some burger place. It cost them $12. Maybe it was Chick-fil-A or something. Anyway, that was a trade and was set up right here on the 8th. And then right there, we were targeting a bunch of different things I look at, but that was why the trade worked. And so here was the trade setup. Buying the 197.5 call, selling the 200, sell the 200, 202.5, $2.50, $250 wide spread. Cost of the trade, 12 bucks. Potential, $238 spread, 1,983% return. Now that's a lotto trade. And so here it was, went out, that's expiration, went out perfect. But that is a rarity, but that it can happen. So to put it mildly, you can get these kind of returns. Somebody said, hey, I just made almost 2,000% return. You'd think they're lying, but these are real. You can do these types of things with certain types of option spreads. Primarily the butterfly will give you this type of potential. So 12 bucks to 250. So that was an alert trade. And then here are a couple others. Yeah. Question, are you doing this with futures? No, but some members do futures. I don't send out alerts for futures. No, there's just too much. I just like stocks and ETFs. They're just, but you can do futures for sure. Yeah. I mean, that's all I used to do was futures, but I enjoy stocks and ETFs more than I do futures, to be honest. And then here's the other kind of category. We do a lot of these, okay? So these are the calendar counter diagonals. So primarily what you'll get most of the alert service will be calendar and counter diagonals and butterflies and condors, okay? And then some selective pinning trades, some selective credit spreads, and some selective earnings trades. So these are the primary two kind of categories. So started this one back in June 2019 through yesterday. So we've had, the most trades. We've had 283 closed out, 207 winners, 14 break even, 62 losers, run around 78%. So I like to add these because these are more kind of a little bit longer duration that you can use these trades on. And again, some of my members like these because these can be really longer duration. These might last, some members will stay in these things a month, 2, 3, 4 months, the trade. And so we can just roll these kind of spreads. So they're really cool. And so here's one we did not too long ago. This was on Nike. And so this was a really nice, what we call a cycle low reversal. So new Nike long, it was trading at 92.90. Okay, again, here's what I look for. And these are the things that I'm scanning for, spending a lot of time looking for that, maybe you don't have the time to look and maybe you don't know how to look, but I'm giving you these trades and then you can do what you want with them. Weekly cycle low reversal, okay? And then it had a daily plus 4-hour volatility squeeze with positive momentum. And my favorite, a 513 upside cross. So this had everything I was looking for. So set this trade up, said buy one diagonal, 14 June, 7 June, okay, 93, 96 call. So this is like a call debit spread, but we do different trade durations for the long versus the short. So I teach these, this course, I've got the course, I just did it long ago, but in the trade room, I'll show you how to do them. A lot of members just learn as they go as well if they want to do it. So I said, do this around $1.35. And then here it was on the 31st, just the next day, Nike long trading at now is trading 92.490 to 94.37. If long, this spread and multiple contracts take some profit, hold balance long. Currently up $60 per spread or 44% return. All right, so that's kind of what you'll see on the alert service. Then you can do your own thing. Again, you may decide you don't want to do anything, and so here it was the next day. So got into it the 30th at 92.90. Now it's trading at 95. So you may have just bought the shares, or you may have bought just calls outright and you just stay with it, or you could have done this trade. So this had a potential max profit of 175. And then the trade, we took some profit here on the 31st. It was trading up at 95, so 92 to 95. So now you can see the spread. We had into the spread at $1.35. Now it's at $2.15. So we're up 80 bucks, 59% return, in that 1 day period. That was just a look there. Here's another one we did not too long ago. This was on Oracle, and this was again new Oracle long. Trade at 123.83. Trade set up to play a daily cycle low retracement reversal. So here's a daily cycle low retracement reversal, positive momentum. So here was the trade by the diagonal, 31 May, 24 May. Okay, so anyway, 122, 125 call spread at $1.50 around. So you might have gotten in better or a little bit, you know, I usually say when around plus or minus 10 cents or 15 cents, something like that. And so then it was on the 22nd. Now it was trading at 124.05. And then I sent out this thing. I said it was going to have earnings coming up. So I said we'll have a major impact on tech tomorrow. So if long, so I'm always, you know, telling you things that to be aware of. So, you know, you're not having to do everything yourself, and then just kind of, you know, watch your phone for these alerts when they come out or whatever. So I said, if long this trade, here are your options. 1, lock in your profit, close trade balance out today before the close because earnings were coming up. Or 2, reduce long balance to around 25% and hold into tomorrow with an adjusted break-even stop. Okay, so I'm trying to make it as descriptive of the things you can do, and also give you some options to make decisions on, you know, what you think might be best for you. So here was the trade setup. Again, the same kind of things I'm always looking for were in this trade. So we had this moving average cross, we had positive momentum, got into the trade here, got out right here. So, you know, another really nice trade setup. And then here was the option trade. So we had this trade set up right here. If you'd done the calendar, you were in at $1.47. So in at a little bit over that $1.30. And so then the spread, you can see, went up to 250. So out of that, made 103 per spread, or 70% return. Okay. So these are a lot of times we'll do this type of trade structure. And then here's one more that we did. This was a really sweet trade. This was one that we did on Exxon, and this one was really cool because what we did on this one, we adjusted this into a butterfly trade. So these are the cool things that I'll send out to you if you want to follow. Again, you can do your own thing, but you may want to, you know, follow along and do it kind of some of the options that I give you. So here's the one that we did here on. Hold on, I got one more question. Why do you like stocks ETF options more than futures? What converted you from futures past to stocks ultimately? Yeah, good question. So to be honest with you, I got bored with futures. You know, that's all, you know, when I was running a trading company stuff, you know, all we did were futures. So you had a futures contract. All you could do is, you know, WTI, or you could do gasoline or heating oil, right? So they were awesome, but I like, they just weren't stimulating. It was just the same thing over and over. So I got really where I liked, you know, new things. You know, to be able to trade Apple. You know, if you were on a trading desk, you know, you weren't allowed to trade anything but, you know, just specific things. You might be just trading oil. You know, all you did was trade WTI. You can't trade anything else. So I got tired of that because we were just trading those kind of markets. So I really got intrigued with Apple. You know, to trade Apple, hey, you can trade Tesla, Amazon, all those. Just more excitement, more interesting, you know. And then also not as, you know, volatile. The futures, you know, are much more leveraged, and so the stocks and ETFs are just a little bit, you know, less volatile for the average, you know, ordinary trader. You know, so it just made it more a general type of way to go. So to include more people that could, you know, be more comfortable trading a stock or even trading ETFs with less volatility than trading a futures contract. So that's why, basically. Yeah, you see the light. Yeah, I mean, futures are great. Obviously, man, you make huge amounts of money, but not everybody's going to be able to take the stress and the volatility of trading futures. And So over time, it gets, that gets to you, and I just didn't enjoy it anymore. So that's a good reason. But anyway, thanks. That's a great question. So here's a really cool trade though. This is one that we did on Exxon, and we adjusted this to ended up with the butterfly. So I'm always telling our members, clients to always look 2 to 3 steps or 4 steps ahead to maybe adjust a trade if we can make it into a better trade, less theta decay, more potential profit. And this is one that ended up with that big ultimate adjustment. So, but the first trade here's what it was. So we did this Exxon. We started this out with a call counter diagonal on the 5th. Let's trade 105.80. This is a perfect low to high reversal trade. You'll see it on the chart. So the first, we set this up on the 5th, and then on the 12th, we made it an adjustment. Now it was traded. So this was going up. We wanted to, let me just show you the chart. I'll show you what we were trying to accomplish on this trade. So Exxon, I'm going to pull up a bigger chart because this one had such a great pattern, and there was potential for a big move up is what I was looking for on this one. So I just wanted to try to stay in as long as possible. So I'm going to mark it where we got in and just kind of show you what I was looking at. So got in on the 5th of March. Right here. And timing's everything. I just want to point out how specific I am is trying to get these entries as tight as possible, which you don't have to have, but I'm trying to get you as good of entry as possible so you don't have any equity drawdown. I'm obsessed with that. But some people depend on their trading account, their risk. They don't care. They just want to get in the trade. If they have to take a little heat, they don't care. You get rid of all these. They're just looking for the overall bigger move, So you can see that Exxon, I'm just trying to kind of show you what I was thinking at the time. Okay, so first off, you could see that Exxon had a pretty good move down, right? So these are the moving averages I like to track. So here's the blue one is the 200-day. It's a daily time frame. The below that is the 100-day, that purple, and then the 150. So a lot of moving average resistance right there, right? So here's the key, okay? So what I was saying, okay, this is huge. This is like, think of a ceiling of your house or a bunker. Let's say you're in the, World War II, and you've got this bunker with all this concrete, layers and layers and layers and layers and layers of concrete. So that creates huge resistance, right? So that's kind of what I was looking at there. There's a 200 period moving average. Here's a 100 period moving average. Here's 150. That was big resistance, okay? So, but I was looking at this, that when you finally crack it, man, this thing could just crater and you get a big pop. All right, so again, here's your potential for the pop. Look at this volatility squeeze. That's what I was looking at. I found this, scanned it, saw it. Wow, that looks pretty possible big potential. So that was the trade that going into it was based on, again, these same type of patterns. So then got into the trade right there where that vertical line is. Perfect, 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 almost execution. No equity against this trade at all. So then look at it, starts moving up. That's what we wanted to do, right? Look at that. Just perfect. Now it's got a potential. You can see these areas here. It's got this potential to move up towards 115 right in there, and maybe all the way back up to 120, that prior high. But definitely potential to move back up towards that 115. keeps creeping, keeps grinding. Now it's getting up to 115. Look at that. Now, look at that, right at 115. Over there was the resistance level, cycle reversal. See that? Momentum starting to stall. Now this might be starting to come to the end. It's getting a little bit exhausted. See that? See the momentum shifting, getting exhaustion. So if you're in the trade, probably want to get out right about there, take your profit. Now it could keep going higher, but you're booking your big chunk. It's starting to show some exhaustion. So that's how these tools work and help to navigate these markets. Boom, look, it kept going. Look at that. But anyway, that was a good area to get out. And then it finally started rolling over. All right, so that was the Exxon trade. So, and where we got out was exactly right, about close to that 115 right there, okay? So that was going in. Now, here, let me walk you through the trade then. So here was the trade that we did. So on the 12th, we did an adjustment. We adjusted the trade to make it more profitable to us. I'll show you that in a minute. So it went from 105.80, then on the 12th, it was trading at 108.65. We made an adjustment to make this trade more profitable. And then we took a little profit the next day. Okay, 109.95. And then we kept going up, grinding up. So then on the 14th, did another adjustment. It was trading 110.41. Next day, took us some more profit. If you have multiple contracts, I'll send out an alert. So now it's trading at 111.92. Okay, so it was going. What we wanted to do was going in that direction. So here was the adjustment. So on the 12th, it was trading at 108.65. So now we adjusted this to the 22 March 106, short the 15 March 110. So we originally had the trade on here. We had the original trade, we had the 106, hold on. Original trade was the 106, 108, okay? So now we had adjusted this trade to the 106, 110. So we're widening that spread out to make a little bit more money. Okay, so then we did now we adjusted and rolled the short strike to the 15 March series. So now we're long the 22 March 106, short the 15 March 110. And now it's on the 13th, it's trading at 109.95. So it took a little profit there, 109.95. So the spread went from, you can see here, the adjusted spread now we have adjusted cost of 179, went out to 364. So now we're up 185, 103 now, but it still gets better. So you're still trying to hang in there. So here it is on the 14th, trade 110.41, made another adjustment. Now we are long the 22 March. We rolled the whole spread up a little bit more to lock in profits. So now we're long the 22 March 107, short that 15 March 112. So we widened the spread, rolled it up, locking in more profit. And now we've reduced the spread cost down to $1.51. We've got a wider spread. Now it's at $4.85. So it's up $334 or 324% return. But then did one more adjustment. If you were still hanging with it, I showed you another way to make it even better. So sent out this trade adjustment here. So on the 15th, we adjusted this to a long call butterfly. It was trading now 111.70. So remember the original trade, the long part of the calendar diagonal was long the 22 March. So we rolled the whole spread into the 22 March. And now we were long that 107 call we adjusted into, and then we sold against it the 113 call, sold another 113, bought the 119. So now we had a call butterfly trade adjusted to it. And we had it at a $6 wide spread. So 600, and now look at the trade cost. By doing the butterfly, we adjusted the spread cost down to 20 bucks, $20. Potential to make, if it went out right there at our pen, 580 to make 2,900% return. So this is what I'm looking for. So, these are the things I'm looking for that, you can follow along and maybe, you can do it if you want. And so then here's where it ended up. This was almost perfect. So then on the 21st, it was trading at 113.49. The spread exit was 515. The entry was at 20. Okay. So that's kind of the stuff that, that I'm providing with the alert service, and hopefully something that you guys and gals would like to take advantage of. So if you would like to learn more on how to zero in on the very best trades to avoid having your precious time and capital energy tapped inside losing trades, take advantage of this offer here today, and I think you'll be pretty happy with it. So here's the link again. So here's that spec. You can use this, or I'll show you the direct link. If you want to use the direct link, would just be to put in powercycletrading.com/elite, and then use that promo code small cap alert 15. So either way, you can do this or use that. Let me double check questions, and then we'll go forward. And so basically here, just to go back over in more detail what you're going to get. So again, if you've been looking for more help, need more help, here's your alert trade special. So 5 trade alerts for 5 months. You can stop and start when you want, so you don't lose your time. If you want to, manage it, then you get 5 months of the trading club, which comes with it. So you'll either get, depending on what I'm seeing, you do your own thing. A lot of members just take the trades and do their own thing, or when I send it out, I'll always send an option trade option for you to do. So either a butterfly or long condor, counter diagonal, could be a special monthly penning type trade, breakout trades, which are a lot of times credit spreads, or a specific earnings trade. Okay, so I tap into my 4 decades of trading, my software, my research to cherry pick the very best trade ideas for you, try to get you in before the herd. Match the trade idea then with the highest probability option trade strategy for highest returns with the lowest risk. Again, these are options for you, but a lot of people, again, I said they just want the trade, they just want to see what's going on. I outline the trade step by step, so I'm always constantly updating you on the trade, every day if it needs to be updated, and tell you what's going on. I put you in using the best strikes, for the puts and the calls. So very selective on what I send out. And then I monitor the trades throughout the day, for my members, so you don't have to do it. And then if there's something that comes up that you need to know about, I'll send it out. And then, be watching your phone or something, or get an alert, just check it out. Yeah, 468 is, this is 468. Yeah, no, this is, I don't do 5 months, so I don't know. I don't think I have anything on my site that has 5 months. You can't buy it on my site anyway. I think I only, I have to go back. I think I only have a monthly. 1 second here. Yeah, so I'm not sure exactly what you're referring to, the Pang Cha. Sorry if I mispronounced your name there. So use that link there, but that's what I'm currently, or send me an email, but I'm not sure exactly what you're referring to there. Yeah, the trading club, for the trading club, a number of things that you get in the trading club. First off, you're going to get my trading room. So I have a live trading room that's open each day from 9:30 Eastern, 8:30 Central to 9:30. Okay, so the first hour, so that's open every day. So you can have access to that, and that's really helpful. You can come in if you have a trade that you need help on, or want to see the things that we're talking about, potential trade setups. You can do that, or if you have a trade idea, just come on in there and just fire away. So then I go and I monitor these trades throughout the day, so you can not have to spend all your time. And then again, you get 50% off, so you can get the 5 months to the alert service, 5 months to the trading club. And so 575, I think the 575, that's like $115 a month, and that's still a great deal if you did the full price. And I really don't do 5 months. I've been, normally what I've been doing is like a 4-month service, but thought I'd do, something a little bit extra special here today and give the additional, 1 month and an additional, 15% off. Last time I think I did 4 months at 10% off. So I thought I'd do something a little bit more special here today. So I added an additional month with additional 5% off, so a total of 15%. So you're getting this for $489, and again, that's $97 a month, or it really blows me away. That's $3.26 a day. So all 5 of my alert services for 5 months. Again, you can start and stop when you want. If you got to go on vacation, so you're not using your time. And try to shoot for 8 to 12 different stocks or ETFs per month. Always coming through everything all day long, looking for good trade setups. And so this will be a number of different possible trades that I might send out. It could be, again, selective calendar diagonals, or it could be a butterflies and condors. We've been doing a lot of condors lately. Could be, because we're in a market here that's up here, right? Now, when we're in a market that's down here starting to turn over, that's when I typically will do more calendar diagonals and things like that. But we're up kind of the top end of the market looking for breakout trades. And on these trades, I tend to lean more towards these kind of condors and butterflies to keep that risk low. Okay, so there's a reason that I send out what I send out. And so again, that's part of my experience deciding what's the better strategy to do based on, again, the market condition, the market, where we are. And then it might be a selective monthly butterfly or calendar penning trade. Now, we did one last week. We did one just the other day on Tesla. We were looking, and this was just a binary trade. We were looking for potential move to make possibly $200, after the pay package was accepted. If it got accepted, I was looking for a potential up to 200. There's a lot of option activity. So we did a very low risk trade of $22, and actually the market sold and used. So that trade had $22 of risk in it, but it was done to potential huge payoff there. So different things like that. Just look at what the market's given us, and then breakout reversals. These would be either debit spreads or maybe credit spreads. And then selective earning trades. What we do here, typically we'll do a lot of double calendars. And so then I'll send out, you do whatever you want. A lot, like again. A lot of members just want the trades, but I will always give you trade guidelines of an option strategy to use if you want. I do a set video review of the trade after the close to let you know why I did it in more detail. The trades that are sent out are archived, listed and archived. Then every week, you'll have access to my trading club. Then what that gives you is every week we'll do a weekly Q&A that's live and recorded, so you'll have access to that for the next 5 months. I do a video market newsletter every day after the close, kind of review the market, what was going on that day, what happened, what the potential is for the next day, potential trades we're looking at. So a really good newsletter every day after the close. These are typically anywhere from 5 to 15-minute long. And then the big thing is right here. You get access to the virtual trading room open each day, first hour of the day. So that's when we look at, maybe a potential trade setup for that morning, or something in the afternoon we're looking at, or people ask a specific question. We look for trades, all kinds of stuff there. And then another thing, 60%. So anything on my website, any course or any of my software, you can get 60% off, okay, with your members discount. So you've got that, access for that for the next 5 months. Okay, so that's pretty much everything. So it's like your very own research department and professional trading mentor, but at a fraction of the cost. And that, again, $3.26 a day. And I would think that this would be a great thing for anybody here to do if you want to enjoy life a little bit more and not have to be looking for trades. So no more combing through thousands of charts and indexes. No more debilitating confusion over what strategy to use. No more agonizing over the best time frames to trade and make the setup. It's done for you, but again, you can put your own own spin on any of this stuff, and it just gives you the idea, the trade idea, and the potential strategy. But then you can maybe modify it, do it different. So it gives you just options, right? I love the options. Here was really something really nice from There should be no problem here, Richard. Let me make sure. Wow. Just wait. Okay, just go in and use use the promo code. Uh, use this because I just did it and everything worked fine. I always double check, but use this here. And I'll go through there. Use this link here, powercycletrading.com/elite. Okay, use that, and then let me pull up a link here. So just pull up whatever browser, put that in. So you can do this, or you can do that /special. Put that in ELITE. Click here. Okay. So a lot of times it's usually pilot error. Hey, thanks, Rick. Yeah, I don't know. You must have done. It's usually pilot error. So just put that link in. Try that link again, and make sure it's small cap. So do that one, or use the use the link here, powercycletrading.com/special, and that should work too. Because I've been using it. I'll double check because sometimes these links can be broken. And then so something, but if you still have problem, just send us an email. Sorry if you are. Okay, so then the other one you can use, this one, powercycletrading.com/special. Okay, there you go. So either of those two should work for you. So maybe it's your browser. I don't know. Yeah, pilot error. Man, I do a lot of pilot error, and I'm always getting corrected. Hey, thanks so much, Rick. Is that working for you now, Richard? Okay, so either use Power Cycle Trading Elite or /special. Here's that one more time, and then you come down here and click on buy if you want, and then put in again the alert 15 small cap. Okay, let me know if that works for you, Richard. If not, I'll get my assistant to help you out. And then yours from Dan. He says, you're very diligent and totally thorough with your analysis. That is the foundation of your success of the alerts. I paid for my subscription with the first 4 trades I took with you when I was learning how to trade options. So, a number of people will do that. And please feel free to share this with other participants. And then Scott, best investment that you'll ever make, go with the elite package, great group of traders. And that's so true. So just, one last summary here. We've got, running around 79%, just trying to maintain high winners. So when I do send out a trade, I'll give you suggested option trade. I'll give you what entry levels we're looking at, profit targets, based on what I call price target mapping. Okay, you got it, good. And so this is, based my targets on what I call price target mapping, which is made up of unusual option activity, Fibonacci levels, moving averages. So based on profit targets on that and stop loss, targets on that kind of stuff. What option series to use, stop loss levels, guidelines, and then adjustments if needed. Trades are listed and archived. And then you're going to get for the next 5 months a trade video newsletter after the market closes. And also reviewing any trade setups that we do will be in that video review. And we do a weekly Q&A every week, live and recorded. So come on in for that. Virtual trading room every day during the week, 9:30 to 10:30 Eastern. And then discounts, you'll get a members code discount, which will give you 60% off on everything on my website. So if you go to my website and you use that discount code, you'll whatever else you might want to get, could be an option course. Here, if you go to the website, you can see all the different things that I offer. Courses here, you've got just everything's pretty, a lot of different option courses. Get started trading options, ultimate options, covered calls using synthetic options, trading cycles and breakouts with futures, technical trading profits. Here's selling options for income and profits. How to make ongoing revenue with counter diagonal spreads, earnings option workshop, butterfly long condors, Fibonacci price target mapping course. And then if you want any of my indicators, here's all my software. So just got a lot of different stuff here that's available to you, and all these things are available to you at a 60% discount. So if you want my scanner, this is what I use a lot of times just to find these trades. If you want to do it yourself, you can do it with the scanner. So you can come in here as $397, but once you get your members code, you just put that in there and they'll drop that down to 60% off. I think that's 158 bucks, something like that. Or you might want my custom indicators, my multi-time frame indicator, momentum flow indicator, opening range high-low breakout indicator. My momentum signal indicator gives you arrows up or down when things happen. Cycle reversal indicator, extreme range band. So all those things, anything on my website are 60% off. And that's pretty much it. And then, 5 months of the trading club. So you'll get trading room, daily video newsletter, weekly Q&As, discounts, etc. Yeah, I've got TradingView. A number of my indicators are available on TradingView. Is TLT on my screen lately? No, it's already broken out. Yeah, we can look at it. Let's take a look. We can look at TLT real quick. So the really last decent time was back here, right here. You can see here we had a cycle reversal, momentum 2 right here. Then we had the moving average cross. This was the entry right there. But this has been a hard one to trade because it's been just, it's obviously bonds. So we've had all these different reports. It's not one that, it was not a good one to trade. We had non-farm payroll, we had auctions. It hasn't been a good trade. Just too much to navigate. So, look to other things, just too much to navigate. So no clean setups on TLT lately. And actually, that's should be 489, not 468. I don't know why I have that 468. That's pilot error. That should be 489. Anyway, 489. I've changed that. Okay, so it's 15% off basically, and so that comes out to 489. Yeah, but that would be, Tom, you did that. You had the course and all that stuff, and you got that for 4 months. So I think that, I can't remember what package that was, probably maybe the directional trading course. You did that. You got the indicators. So everything's a different do different packages. But that was what we did for that one. But with that one, you got all the, I don't know what all the course details and bonuses you did, but you got something else additional for that. Yeah, so the butterfly lotto trades are, yeah, part of the package. So those are some that are done. I'll show you the one that we sent out this past week. This was on Tesla. Hold on. Let me show you. This one I think we sent this out Wednesday, I believe it was. Yeah, here it is. All right, here's the one that I sent out. This was on, yeah, this was on the 12th. So set this out. So new Tesla long binary butterfly trading at 179.80. Trade set up to play a potential upside daily volatility squeeze breakout, which it had, based on Thursday's vote to either grant or not grant Musk his 56 billion package. If granted, there's a high probability the move to the 21 June 200 strike on the 21st of June. This 200 strike has over 90,000 open interest contracts. So send out this to buy a butterfly, 195, 200, 205 at around 23 cents or $23. This was, you could have gotten into this about 20 bucks. That's where it was most of the day. And so actually this went up the next day. Actually on Thursday, this was up to about $35, 35 to $40. I remember looking at it, but put it on to see, okay, man, if we get a move to 200, this has, if you get a spread of, it was a $5 wide spread, right? The potential in this trade was huge, $5 wide, and let's say you got into 20 bucks, potential was to make $480. I mean, that's, if you had the perfect pin. And so these are the, 480. And if you did just think about that, 480, and you risk 20 bucks, that's a 2,400% return. So these are kind of things that you just put on, every now and then you'll have one hit, and so they're pretty amazing. Yeah, so I do send not a lot, but I'm very selective. I'm not just going to be throwing stuff out there to throw it out. All right, so any other questions? They are fun. They are fun. Any other questions? Let me know. So this is a trade that we set up in the room. It's a pretty cool trade. We set up a trade for a potential double butterfly, I call it Batman butterfly, for a pin at 200 or a pin at 170. And then we hedged it out to some extent, doing a iron condor, where we sold a credit spread right here, 210, 215 credit spread above it to kind of collar, adjust the upside. Didn't think it's going to go over this 200-day moving average, and then sold a credit spread 155, 150. So this took out any potential cost to the middle of the spread. So it's a pretty cool trade. And I'll show you where that currently is. So here's the trade. We set this up in the room a couple weeks back. and it's actually up a little bit of money right now. So what we did was went out and did this what's called a Batman butterfly. So we were looking for a butterfly for a potential pin at 200 or a pin at 170. So now there's potential pin at 170, I think. And then we collared it on the upside by doing a credit spread where we sold the 210, 215 bear call credit spread, brought in about 36 bucks, and then sold the downside 155, 155 bear bull put credit spread at 42. So what this basically did was if it goes out, see in the middle here, between where it is currently right now, it's trading at 177.80 right here. We're still going to make money. We make $4. Okay. Now, if we had not done that, so thought about doing this, if we hadn't done that, we would then just have the two butterflies on, and right here we'd be down. Potentially, we could lose $74, right? Now we can make, if it goes out at 200, you make, close to 420. If it goes out at 170, you make about 420. But if it goes out in between without that iron condor, you'd lose 74. So we did the credit spread around it, and that made it no loss, actually small profit if it goes out here. So pretty cool way to do that. Did that one in the room. All right, so those are kind of things we're always, I'm always thinking about.